All right, back here on Survive and Thrive, I wanted to delve into this question that I've been thinking about for a while, and that is, does it really pay for you to jump on the bandwagon and buy in on the IPO date for a lot of these stocks and companies coming out? Just going back over the past year, 2021, I wanted to cover a number of companies that have come out this year, starting first with Kupang, CPNG. This company came out with their IPO on March 11th, 2021. Their anticipated per share price was $35. They actually ended up opening at $63.50 and closed that same day, $49.25. Now, as you can see on this chart, they're currently at $27.22, or a 44.73% deficit year to date. And so, like I've covered in previous videos specific to Kupang, I'll give you access to that here in the upper right hand corner. But you can see that this is coming to a place where there is a decent entry point, and one that I really am watching very closely. Now, as I go into these other companies, I really want you to just make your own assessment. I'm not a professional investor. This is all for entertainment and based off my own opinion. But you will start to see a trend, at least the trend that I picked up on, and this is what I wanted to get across to everybody. Jumping into the next company, we're going to take a look at Procore. And Procore was actually a company that IPO'd on May 20th, 2021. Their anticipated price per share was $60 to $65. They actually ended up opening at $67 and closed that day at $88. Currently, they're at $90. And so you can see that they've been on the rise, which is a good sign. And so that definitely would have been a great opportunity to jump in at the front end to take advantage and have a decent gain to the current date. But then I also wanted to cover the next company, Lucid, LCID. And I know many of you are aware of this history as far as them starting as a SPAC merger, so this is a bit of a different case. But they did actually have their IPO in late July 2021, and their anticipated price per share was $35 to $40. They closed at $26.83, and currently they're at $24.61. But you can see that when the merger was announced, and the original SPAC was CCIV, Churchill Capital, and at their all-time high back then, when that announcement was made, they were at $58 per share, and they plummeted all the way down to $22. So they're only a couple dollars more than where they were back in March. And so this is one that I'm also closely watching to see if there's any downward pressure, and will give me a decent entry point to jump in on this one and build a holding. But I do know that they are planning to deliver here in Q4, and so that could be a catalyst depending on the outcome of those deliveries and how that goes with what they've estimated, to further push up this price per share and get some decent gains for those who bought in early. I wanted to finish with Dutch Brothers. They debuted on their IPO date most recently here, September 15th, 2021. Their anticipated price per share was going to be at $23. And I think, as most of you are aware, they actually jumped very quickly that day. $36 to $37 is where they closed. And currently, as you can see here on this chart, $46. So this is also one that I don't know if it's still a bit overvalued and on the speculation side for investors who are buying into this new gimmick or new trend and looking at a pump and dump. And so I really hope that for those who wanted to buy in day of, that they may get a second opportunity to buy in at a lower price, maybe in the upper 30s or mid 30s, but time will definitely tell. And the biggest key takeaways I wanted to mention here is that in all of these cases, you can see that a lot of times the day of, whatever they anticipate for the share price versus what it actually opens at and closes at is oftentimes much higher because institutional investors get a first crack at buying shares before it gets opened up to the regulars like us for retail investors. And so it makes it really challenging to get it at a decent price and not be in a position where you bought it overvalued. And so it's something you've got to be very careful with. And I know there's been a number of YouTube videos out there that I've seen specific to Coinbase. And I know a bunch of people got burned because they bought in, they thought it was at a decent price and thought it was just going to skyrocket, which it didn't. And then obviously with it being tied to cryptocurrency, then there's a lot of volatility and it went on a major downward spiral. And so a lot of people got burned. That one's a little bit different, but like I mentioned, the key message here is don't get burned. Try to do your homework and do your due diligence. And like I mentioned, most times from what I've seen, buying in the day of really doesn't gain you a whole lot. That's really what I wanted to go over today. If there have been success stories out there for people who have bought in on the IPO date and been able to have really great short-term gains, definitely leave a comment below. Share some of that success with the rest of us. And if there's upcoming IPOs that others are interested in or are on their watch list, definitely share it with this group so we can keep our eyes on these and see if it's something that might be of interest down the road. So really that's what I wanted to touch on today or cover is, does it make sense to buy IPOs the day of, or should you wait for a month, a couple months to see how it trends? And then a lot of times it will get down to the IPO price, if not lower. And that gives you that second chance to jump in at a decent entry and know that you've got some backing behind your purchase because it's now been out for a while and it's not just a novelty. That's really all I wanted to cover today. If you've gotten value out of this video, definitely smash that like button. And as always, subscribe. I'm building my members. I'm almost to 70. I want to get to 100. That's my next milestone. Would really appreciate all of your help to get there. And let's go make some of that green this year. Look at that long-term vision and investing strategy on your path to financial freedom. And don't just survive, thrive.